Hi, everyone. It's Bill and Wendy again with Carolina Capital Management, and we're here with one of our good friends and investors, Sue Jensen.
Not good friend, dear friend.
Okay.
She's my dear friend.
Dear friend, Sue Jensen.
She's one of my besties.
So, give us an idea of how you got started in investing in the first place.
Okay, so my husband and I were in our 50s, and we realized we were...
Last week?
Yeah. A couple months ago.
Yeah.
We realized that we were behind the 8 ball in saving for our retirement, and it was coming up fast. So we started stuffing money aside into our 401k, our 403b, saving our money as much as we could. And I said to Dale, I want to start learning about investing in real estate because I know that's a way to really aggressively get this to grow. He didn't really understand what I was talking about. He thought I wanted to be a realtor. And I said, no, investing in real estate. And I said, I just want to start taking some courses. So I started doing that. And then in the meantime, in 07, 08.
A time which will live in infamy.
Everything went downhill and crashed, and we lost a bunch of money in our 401k.
Was it invested in a stock market?
Yeah, stock markets and mutual funds and all that. So I said, you know what? We have no control over this. I want to take control. So I started learning, going to conferences and taking courses. And we ended up buying 3 houses to invest in, 2 rentals, buy and hold, and 1 for a fix and flip.
Now you were in New York.
Yeah.
But you bought these houses were they in New York too?
1 was in South Carolina, 2 were in North Carolina, because we knew we would end up down there in retirement because our kids were down here.
Right.
And they were having kids of their own. So we knew, okay, we're going to be near the grandkids. Forget the kids. The grandkids is what we wanted to be close to. So we started buying, and plus the market was so much better in the Carolinas than it was in New York. It was a bad place to try to invest in New York. So we bought those 3 houses, and they were a big hassle to us. We weren't looking to increase our work, and this was increasing our work. It was adding a lot of stress to our marriage. Dale does not like being a landlord. Plus, we were long-distance landlords. We didn't have a whole lot of control. So when something went wrong, like a dishwasher went bad, we were trying to get people to shop for us. It was just a big hassle. So the way I met Wendy was I called the president of the REIA down in Charlotte.
The Real Estate Investor Association.
J.C. Underwood. And I asked him, can you give me a property manager? I need a good property manager. He gave me a name, and I said, can you give me another name of someone that uses him? And he gave me Wendy Sweet. So I called Wendy, and I started talking to her. And we talked and talked and talked, and we just really clicked. Yeah. And I said to my husband later, I really like this woman. We just clicked right away, and she was so helpful. You were so helpful to me to learn not only what I was doing, but another way of investing, which was lending money, which is what she was doing, which I was fascinated with. I thought, what? You're lending money to people? Yeah, we're like a bank. And I put these people together. And so I said, I got to learn more. I would call her up time and time again. She'd spend all this time explaining it over to me. It was like so dense. Like, tell me again what you do. And eventually I said to Dale, we have got to go down there. We've got to fly down and meet Wendy and her team, because this may be the answer to what we need to do. This may work really well for us. It was more passive and better rate of return. So we did that.
Yeah, one of the things we always preach, it's better to control the asset without being responsible for the asset. And you don't have to worry about tenants and toilets and trash and all that stuff.
We had termites, we had mold. I mean, we had all kinds of stuff.
Yeah, you got to experience all of it.
Yeah.
And I remember, too, when you guys came down, I got to meet you and Dale, and Dale sitting in his chair like this the whole time. He was not happy.
He was going to grill her.
And he did.
He did. At first I was embarrassed, but then I saw that Wendy didn't mind it at all, and it was great. I was enjoying it.
Well, we love educated investors, and we love educating investors as well. So we want those grillings because that's the only way you're going to feel comfortable. So at what point did you start investing, putting your money into a self-directed IRA? How did you even hear about it? There's only like 5% of the population that even knows about self-directed retirement accounts.
Yeah. Mm-hmm. So it was 2 courses that I had been taking before this, the Rich Dad, Poor Dad course, and then a course on tax liens. I was also investing in tax liens, and they both talked about self-directed IRAs. So then I started going to equity trust conferences. So we really ramped up our self-directed IRAs. We actually have 5 of them right now, and our family has them, but that's the best way to save and start investing.
Absolutely.
Well, by the way, the vast majority of your self-directed IRA custodians are a great tool for education.
Absolutely.
They do not promote any particular investment, but they educate you on what type of investments that you can utilize in your self-directed retirement account. And one of the worst things people do when they open up a self-directed retirement account is that they don't invest in anything.
They let it sit there.
Right.
Yeah.
And
it's not working at all.
Not only are you not making money, but you're losing money because guess what? They charge fees.
Yeah.
So
Ouch.
once you make the decision to put money into an IRA, you have to deploy that capital somewhere. And there are tendencies of people to, failure to pull the trigger.
Yeah.
Because they kind of overanalyze things and are a little bit nervous. Sue didn't do that. She jumped in with both feet.
And they want you to deploy it because they're going to make more money every time you do deploy it and invest it. But they want to give you options. That's what I love about all the different IRA companies. You can sign up on any of the self-directed custodian websites and get into all of their webinars, their seminars, the different events that they put on. They teach you about self-directed IRA things, but they also hook you up with other people of different ways you can invest your money. They're not endorsing anybody, but they're saying, hey, look at all these options that you have out in front of you. So that was a great move for you to do that.
And by the way, one of the ways to invest is in the stock market.
That's right.
If you're still a stock market
I wouldn't do it this week, though.
Maybe a few more days, then jump in.
But that's the problem with the stock market. But if you're still a stock market person, you can still do it in your self-directed IRA.
That's right. That's right.
So what, at this point in your investing, is more important to you? Is it being very active in the investments or being more passive?
Definitely more passive. And that's why I like working with Wendy and Bill, with you guys, is...
Where's Bill?
Yeah. I got money in your fund. That's even more passive. But it's so much nicer, especially for us. We're supposed to be in our retirement days. So...
You flunked retirement.
I know, I flunked. I got in the wrong line.
Listen, you don't retire. You just move on to what's next.
Yeah, that's true.
Yeah.
That's true.
But you guys do the heavy lifting, and you have like 30 years of experience in this industry, in the financial industry. You know what a good borrower looks like.
Right.
And you know what a good property looks like so much better than I do. So I could maybe, get a borrower and say, oh, they seem nice. They seem like they got it together, but you guys...
And they told me they'd pay.
Yeah, they said they'd pay.
Promised.
But you guys know how to choose them, and you know all the, the underwriting, and you hold the draws, and you make sure the inspections are done, and the title search, and all that stuff that protects you. You guys know how to do that so much better. And so you just put me together with a borrower and move from loan to loan to loan, and our return has just been awesome.
That's great. And I'm really glad that you brought up what you did, too, about doing heavy lifting, because even with the knowledge and the experience that we have, there are still bad things that can happen.
Sure.
You can still lose a property. You can have a borrower that doesn't pay, and you've been through that with us.
Yes, we did.
So
we were in it together.
That's right.
When we had that one bad egg.
So can you tell us about that, how you felt going through that? Because we all, it was a good year that we had to deal with all of that. So how did that affect you? How did you feel going through that? And what was the outcome for you?
Well, when we went into this, we knew that with any investment, there's always risk. There's nothing that's for sure. So even though everything looked good and went really well, in our first few years with you. We started in July of 12 with our first loan.
Wow.
We've now done about 60 with you and 4 or 5 privately.
Wow.
But in our first few years, I did the math last night. So that's when interest rates are really high.
Yeah, we were getting 15%.
15% plus renewals.
Yeah.
So we actually doubled our money in about 4 years.
Wow.
Yep.
Wow.
I mean, I wish I had put a lot of money in at that point. But we put a good chunk in, and we were just amazed at how different it was and how good it was. But then we hit that bad borrower. Mm-hmm. All of us did. Mm-hmm. And especially, I was one of those that had several of his loans.
Right.
So things got rough because we had to take all those houses back and finish them up.
Did you have to take them back?
I didn't have to take them back. I just prayed for Wendy. Yeah. God help this woman.
Thank you.
No, that was rough. I felt for you. But I knew that you were going to do the best that you could with what you had to work with. And a lot of us lost some principal. We lost some, but really during that time, I worked that out too. We were still making about a 6% return during those awesome. 2 years. That was the worst.
From the start to the finish, right?
Yeah, so we went to like a 15% to a 6%, and now we're up to about a 12% return.
Awesome.
Right so it was a dip, but you guys learned a lot. We all learned a lot.
Oh yeah.
You made some adjustments. You got an even better team. So I was very encouraged by being able to go through that. Plus, I saw you guys take a personal hit yourself. I
had to put makeup over the bruises.
Oh, man. Yeah. I mean, you guys took losses before some of us took losses.
Yeah.
And you went without pay for a while because you were so concerned for your clients and stuff. And that's what I appreciate. And that's what Dale appreciates is, if we're going to go through hard times, it's not just going to be, okay, the clients lost money. That's what we used to deal with our financial advisor. Yeah, you lost money. It'll come back in 10 years.
Yeah.
You guys weren't like that. You guys were, we're not taking a paycheck for a while until we get this back up to par. And we saw you do it, and now we're on the other side of it. So.
Our business cannot operate without investors.
Yeah.
And so, we treat your money like it's our money. Now, let's get back to the experience part of it. Yes, Wendy and I have tons of experience in this business, and that's very helpful. But this industry is constantly evolving.
Yeah, lots of change.
That's one of the reasons I like it so much, is because there's always change, and it never gets boring.
Yeah.
But
that's not a word I use.
There are certain constants that stay in place, and that's figuring out risk. And you're always going to have a loser now and again. I follow, and I don't want to get morbid here, but I follow crash in airplanes and why they happen. And it's never one thing. It's always a chain of events that occur.
Yeah.
It's never just one little accident that causes it. It's always a chain of events.
A series of unfortunate.
When you do have one that goes bad on you, it's not just one little thing. A chain of events happen, and then they kind of snowball. So it just feels worse than it actually is. But anyway, I appreciate you hanging out with us.
Yeah.
And even though that you did lose money at one point, in the long run, and any kind of investment, especially in real estate, is a long-term commitment.
Mm-hmm.
That's right.
And if you're day trading, as it were, you don't want to be in real estate anyway. Because yes, you can make a bunch of money, but yes, you could lose a bunch of money. But in the long run, it's going to always go up in value. Right?
Right. Well, what I also want to say about along those lines is that you guys surround yourself with very smart people, and I appreciate that you're constantly going to other masterminds, you're learning all the time so that you not only become more knowledgeable, but you become more wise because you're talking to so many other people in the industry that have their eyes open and their ear to the ground, and they're trying to figure out what could happen, what might happen, what is happening, what's working, what's not working, so that you can stay on top of it. And that gives me security that I depend on you guys.
Yeah.
It's like paying a small amount of money to learn from other people's mistakes than paying a large amount of money from learning from your own.
I'd rather learn from theirs.
That's for sure. That's for sure. And it is really important to not be the smartest people in the room. Yeah. We're good.
Yeah,
we're smart. Good with that. We're not the smartest ones in the room.
Gotta stay humble.
So and it's a blessing to be around people like that that kind of have the same values that we have too, and that can help lift us up when we need help, and we're thrilled to be able to help them as well.
I always quote our friend Glenn Stromberg. I've never had an original idea in my life. I just surround myself with a bunch of smart people, and I copy what they do.
Yeah, that's right. You do. You just redo what other people have invented.
You don't reinvent the wheel. You just copy what they do.
That's right.
That's a smarter way to do that.
That's exactly right.
So, in closing, listen, I appreciate the time you spent to come visit with us.
Experience.
So apparently your experience was pretty good. Glad I asked that question.
I would say it's been life-changing. I really
Oh, wow.
I'm not just saying that. It's true. It's been life-changing for us. We can live the lifestyle that we really wanted to, but didn't think that we would be able to in our retirement years. With my husband being a pastor for 40 years, and then, me just starting to save later on in life, we thought, how are we ever going to make this work? But just from that phone call when I felt like we were put together for a reason, and that, that click where I said, you know what, I think there's a destiny there's something in our future with this company here, and I'm so glad that we stuck it out, even through the tough times, because we've been blessed, and we've been able to be generous. We've been able to do the things that we want to do because of our dealings with you.
Awesome. And that goes both ways. We too are blessed, and good thing God knows what he's doing, right?
Good thing we're listening once in a while.
Right.
And the best compliment that can be paid to us, and you've already done that, is
many times
referrals
over.
from others.
Yeah, many times over.
Because we've gotten other investors through Sue.
Lots of them.
Family members,
By the way,
friends, our old church.
That's right.
Yeah.
That's right.
I want to add something too. Sue volunteered. She was the director of our REA group.
2.5 years.
That's what it means. She flunked retirement.
2.5 years. And that's a thankless job. A lot of the people that are there are brand new to real estate.
Yeah.
And they sit in rooms on their hands. It's hard to rally the troops. Again, occasionally Wendy will come in there and do the whoop thing.
Yeah. She's a good job at
Get
that.
people wound up. But you did an incredible job with that. So we
that
thank
was
you.
Wonderful.
We've been involved in that REA group for how long? Since
2003.
Yeah.
2002. Okay, 2001, and that's my last offer. It was 2001 in September. I remember it well.
But you don't have to join a REA group.
Yeah.
You don't have to be involved in real estate to invest in real estate. We do want you to be educated.
Yeah.
But what we do is passive.
Right.
And
for others, not us.
Not for you.
You don't need it to be a second job.
That's right. That's right. That's exactly right.
Thank you so much.
Yes, thank you,
for
sir.
joining us.
My pleasure.
For the ride out here, because I know it was a long way, because I have to drive it every day.
So you know.
Thanks.
So that's it for our show today. Please forward, share, like. There's some links
around
as
here
well
somewhere.
For archive stuff.
Yeah.
We will see you on the next show.
Thank you. Hey, thanks so much for joining us this time. And if you really like this show, you'll have an opportunity to see even more. You can choose up here. You can choose over here. You can choose down here. Right? Awesome. Don't forget to like and subscribe to our page, and we look forward to seeing you again soon.